what is...
All right, testing. Jamie Saettele here, Friday, November 21st,
It's more than that though, so it's,
2014, and it is 2 o'clock. Just let me know if you can see the charts and hear me.
So send me the leads report, the most accurate one that you have, and I'll forward it on to Mike, and that at least can give him our lead information, and we have to go back to marketing to get the actual numbers.
I can't tell if this is working or not. I don't have any. Does Cover It Live like have a lag sometimes? Oh, here we go. Okay. All right. So everyone's here. Lots of questions on the Euro Aussie, gold and silver. So let's start just with a general look at the U.S. dollar. We'll look at both indices here, the ICE dollar index, and then of course we'll look at the U.S. dollar, the FXCM Dow Jones U.S. dollar. So first of all, everything in the last few weeks, last 3 weeks, it's kind of been a dud until Friday, and then things have gone nuts. You had kind of the perfect storm. Lots of questions on Euro Aussie. You had the perfect storm last night for the Euro Aussie, obviously with the rip higher in Aussie, PBOC. You had Euro with what Draghi did, and combine that and you get 2% down in Euro Aussie. So we'll take a look at that here in a second. But again, here's the dollar. So We are pressing, and this is an upper parallel in the Aussie Dollar index, probably about 88.50 or so over the next few days, maybe a little higher. And what's really interesting about that level is that's the weekly close, 88.51 from March of 2009, which I would expect to kind of offer some resistance. Would be a difficult level to just simply go right through, right? Another just very quick observation that I just noticed as I'm speaking is this week you have an outside week here in the dollar index at the highs. There's an old adage, you don't want to be the last one to buy the outside bar at the high or the low, for example, because it can be kind of exhaustive in nature. When you're getting into these extreme, emotional trend moves, obviously you got to kind of move on down to the lower time frames. And the US dollar, this is the FXCM Dow Jones US dollar now, going back to the mid-October low, that was 10.15. That was also the low in stocks, right? And since then you've had dollar yen up from 105 to almost 119, currently trading just shy of 118. And obviously we know what happened in the S&P. It's up some like 12% or something like that, I think, from the lows. So this channel continues to hold. If you draw it like this is probably the correct slope to put on here. Every time we dip under this median line, the thing rips. But I will note that if we put on RSI, 4-hour RSI, momentum is obviously much, leaves a lot to be desired at these levels, right? I mean, that's what it usually looks like once you get a bigger turn down. You have a drastic divergence, right? Now you're not seeing that necessarily on the euro. Right now the euro is getting into oversold territory, so we'll talk about some possible euro setups and the questions on euro Aussie. Euro Aussie might be a decent play as Aussie is potentially unfolding in a larger consolidation pattern all the way from October, so I'll give you an idea of what I see possibly happening there. So we'll go now to some simple setups. Here's the euro. I'd been looking a little higher, to be quite honest, especially after we continued to hold on Wednesday and Thursday, 25.05, right? The bigger resistance to me was up closer to 127. You had some measured levels up near 126.60 and 126.84. So you don't want to completely forget about this, just yet. We've seen obviously some surprises before, but if we just look at a simple trade setup, compare it to the last breakdown and kind of the last flag that we had in the euro on the upside, compare that here to the rally into the 15th. It started to break down, new lows. This one is a more subdued version of it. Obviously didn't trade nearly. This rally from here was what, 125 up to almost 129, and now we have 123.60 up to 126, so not nearly, that's a shallower retracement. Wondering, I guess, if we're starting to see even a trend strengthening in the euro, believe it or not. That could be possible here, but that's all conjecture at this point. What you got to figure out is where's the ideal level to trade. And if we just look at how this setup played out, breakdown, okay, retest the former support line, if you will. Well, we broke that obviously today, so now you look at this line here and see where that might be. On the upside, the underside of it is possible resistance, and it is about looks to be about 124.50 or so, which is great because it lines up, with former lows here, right, from earlier this week, actually. That was Tuesday's low, 24.40. So I would keep an eye on the 24.50 region as a resistance level for the euro, okay? And to be quite honest, I don't know if you really want to give it that much more leeway, because if the market starts to, come off the lows, we obviously know that shorts are still really crowded. I mean, the COT reports haven't changed. We're getting really close to record amount of short positions in the COT and the CFTC futures positioning. So there's certainly fuel for so-called short covering rally. When that happens, and I've been talked about it last week on this webinar, that the seasonality turns down again for the dollar, turns up again for the dollar, at least on a short-term basis, the week of December 5th. So, we seem to have had everything in order for a continued euro correction, dollar correction, with an early month reversal here on NFPs, and looking for continued choppiness on the upside into December 5th, and wherever it may be at that time. It could be up here near this line, near 127, or even higher. Obviously, at this point, I'm not sure we're going to get that, but 124.50, I'd keep an eye there for early, next week as resistance. When it comes to support, how dare I mention support, but we do have, for the euro, coming up on 123.15. That, of course, was the week of the low from July 2012, 23.15. This is something we refer to as weekly reversal support or resistance. The same dynamic took place at that low, where the prior big low was back in 2010. And the close that week was 121.10, and then you can see the low was made after we went through that level and came back above it. So the low in 2012 was 120.42. It was 60, 70 pips below the close level from 2010, but it's definitely worth paying attention to. Especially if we were to come down through it and then rally back through the level. And if you're wondering what this line is, that's just a simple trend line off of the 2010, 2012 lows, and it would come in at around 122.30 or so next week. Okay, so those are your levels, I think, to map out or to put on your charts for the euro over the next week. 124.50, leaving not a whole lot of room for error on the upside, and then 23.15 to 22.30 on the downside, again being the 2012 area and the trend line. All right, so let's look at some other euro crosses. Euro yen has been actually came up to our reaction area, which was 148.30 to 149.25. And you ask, what are these levels? Well, 48.30, and the high, by the way, was just shy of the top, which is 40. It was 49.13 yesterday. This 48.30 level, you just take the difference in price here. It's a 200% extension. So from 141.22 to 134.13, that was the prior decline. And once we broke out of that level, that's basically your breakout target at that point. Okay, so that was reached. And then the top level of 149.25, you can actually see it better on a monthly chart, but it's this low here, all the way back. That's the August 2007 low. Okay, that is when, obviously, that was the start of really of the financial crisis that was with the tightening in credit and everything. That really started in July of 2007, right? That was the beginning of the burst of the carry trade in July 2007. Went back to new highs here, and then everything, as we know, fell apart in October of 2008. Okay, just to give you a little market history, but that's where we are with the euro yen. Trade-wise, you know, this is what we're mapping out for the euro yen. You can see that this parallel fork, okay, right here, the median line actually ended up getting the high yesterday, and we've now completely broken all parallel supports, okay, within the move from 10.15. So that means what you know, that doesn't mean there's a trade here at this moment. What it means is that the market's changed its behavior enough where you can look on the short side. So what to watch for next in euro yen would be to watch for a rally to see if it fails at one of these support lines. You can probably add another one here. I should say former support lines. And, you know, say it all the time ad nauseum, but you know, the basis of technical analysis is support resistance, and former support becoming resistance and vice versa. It's true not just on a horizontal plane or Fibonacci or what have you. It's also true on trend lines, on, you know, which would include you know, slope analysis, pitchfork analysis, whatever you want to call it. So that's what you look for next week, potentially, is a failed rally up here. And you know, maybe that takes place if the euro dollar can rally up to 124.50. You know, those might happen in conjunction with each other. So that's what I would be watching for, you know, with the euro yen. And it's really kind of impossible to put a price on it now. You kind of just have to have these lines on your chart and then observe the market and see it, you know, if we get up there, if the market responds, and if it does respond, that gives you an opportunity to potentially, you know, put on a short position for, you know, really what could be a really big turn, because we're looking at, you know, we just traded, like I said, to that 2007 low from August. Okay, so that's what we're looking at with the euro yen. Euro Aussie, had a lot of questions on Euro Aussie, rightly so. So Euro Aussie has been, I have a longer term view on this. I do think that eventually Euro Aussie is going to go through the roof. Sounds odd to say, given what's happened today. But take a look at the reaction area here. 46.27. The top was 46.32. You ask, where did you get that level from? Well, I just showed you about the euro dollar.
It's gonna take you 2 seconds to work that out.
And
you know me, it's my face, it's my
about the euro dollar, the euro dollar weekly chart, 123.15 being the 2012 weekly reversal support. Well, that was the daily reversal resistance for Euro Aussie. Okay, right here. And again, it's the close of the high bar. You could actually say this was daily reversal support for the Euro Aussie down here. That close of the low, the gap that was filled at 142.30. Low was 142.26. Okay. So from here, I think you look to 141.50, okay, for potential exhaustion low in the euro against the Aussie dollar. It's the 61.8. You also have a channel here, okay. You know, so it is downward sloping, obviously. You don't have anything upward sloping here, but if I give you a view of the weekly chart, this is the wave count, and this is obviously super long term, but it remains a possibility. 1, 2, extended third wave, fourth wave, carving out waves 1 and 2. with wave 2 being such a pain in the butt, especially this week, just being intense, looking like you wanted to break out higher, the epic failure we had today. Watch that 61.8 level near 41.50. Okay. And then, of course, you have a much bigger level down here at 40.50. So these are, I'm just pointing out big levels here. This is, I'm not telling you to go out and buy 140.150 or 140.50, but if the market were to react and try to form some sort of a low at 140.150, you could have a big swing idea right there. Also, I want to show you on this Euro Aussie idea, macro long-term type of stuff. I'm going to put in, this is Euro Yen, okay? I'm going to put in Euro Aussie. What I want to show you, just going to put line chart, we're going to make these closed charts to make it really easy. So give it some nice colors. Let's see, let's make Euro Aussie. We'll make Euro Aussie, or Euro Yen. We'll make it red. We'll make Euro Aussie. We'll make it black. Okay. So again, red is Euro Yen, black is Euro Aussie. Ever since the financial crisis, okay, ever since August 2009, which was after stocks bottomed, you've had a pretty good relationship between these two rates. In fact, Euro Yen in its really big moves has actually tended to lead Euro Aussie. Right? I published this same chart a couple of years ago in 2012, after the yen had started to show signs of really reversing. And the big idea then was, well, you know what? If you're worried about missing the Euro Yen on the upside, check out Euro Aussie on the upside. Well, we have a similar thing here. It's pretty, it's uncanny, really. In fact, it looks to be a lag of a month to a couple months at certain points in time. The all-time low here, okay, I shouldn't say all-time low, but the low for the move that we had in 2012 for Euro Yen was in July of 2012. The August 2012 low was in Euro Aussie, so it's 1 month later. The big rip higher, right? Well, that move topped last December, so 11 months ago. Then Euro Aussie topped 1 month later, in January of this year. Okay, and here we are now. Euro Yen, as we know, has gone through the roof to new trend highs. One has to wonder, given the relationship that we've had for several years now, if if Euro Aussie's next to go. Okay, if the relationship holds as it has for several years, then you have to say yes. This is what you should be looking for. And when you're looking to time it, of course, you have a relationship like this with this channel, extremely violent. If this thing starts breaking down, 140, 150, as I said, down to 140.50 might be, an interesting area for a really big bottom in the euro against the Aussie, right? So this is quite a long-term analysis of the pair, but probably worth considering. Worth considering, as we move forward, especially if Euro Aussie starts to show signs of, a bottom at slightly lower prices. Okie doke. So there we are with the euro. What do we want to look at now? Had questions on crude, Euro Yen. Pete wants to check out Euro Pound, no doubt. Let's check out Euro Pound. So Euro Pound's another one. That we had, again, another daily reversal resistance trend line resistance, median line resistance. We had the whole gamut here of resistance. Okay, we also had a trend line in the weekly chart going back from highs in 2013 and then earlier this year, which we sliced through just this week, and then come off obviously, significantly. So when you look at the euro pound, we got a nice low here at a very long-term median line. What I think might be going on is a triangle, okay, and this is a weekly chart, but you can see it pretty well. Kind of, running triangle, A, B, C, D, E, something like that. So, where we trade off lower into 78.40 and then get a pop and then get that final thrust lower in the Euro Aussie pattern, in the Euro pound pattern. So it doesn't look like Euro weakness is quite finished when you look at some of these crosses, with the Euro Aussie support being a little lower, with the Euro pound potentially unfolding in this triangle pattern, running triangle. It's been going on since July. Sets things up for a few more weeks, at least probably a few more months of range-bound action in Euro pound before you get a thrust to the downside and then potentially a low, but that's probably some time off in Euro pound. Take a look now at some shorter term stuff.
No, because I have to fill in all the ones that aren't rated. Yeah, they're very subjective. Because we need this.
So Don's got a question here saying, you expect a correction year again, then higher for future? I mean, I can't predict what's going to happen. I can just point out what's going on now, and we're at a pretty huge juncture for the yen, euro yen. Like I said, the August 2007 low, we just jammed into that, and now that's starting to come off. So you got a short-term change of behavior rally. Like I said, you get failure up at the parallels that held for so long for the last month and a week. Then you have the opportunity for a short. When it comes to dollar yen, check this out. This is stuff I've been pointing out all week, but this was the chart I put up last night. I think it said this is getting crazy, and we nailed the upper median parallel right here. Okay, goes all the way from here. The next one would be we're talking like mid 120s. So needless to say, it's a good time for a bit of a washout, a shakeout, if you will, on some of these yen crosses. The dollar yen has been kind of a short-term scalper's paradise today. This is the chart I've been working with all day long here. 117.90, 95 was kind of amazing. We just popped up into there at about 1 o'clock, and sure enough, it was, here we are now, trading 25 points lower, and I'm looking for support now in the late afternoon. In about a couple hours near 117.56, 117.60. So for scalp shorts on a short-term intraday basis, that's where I'm looking to get out of dollar yen. But after you have a turn like this, back to the daily chart, after you have the market trades off like a level like this, it's like, well, what do I do? Do I just go short and hope that it works? That's one way to do it, I guess, but it's not really the way I like to go about stuff. So what I'll do, and kind of go from scratch here. Let's do that. Let's get rid of everything. go here, we'll go to a short-term chart, and I'll say, well, what's the slope looking like here, right? The best way to figure that out with actually buy and sell points would be with a pitchfork analysis or a slope analysis. So you go from the high. It takes 3 points to draw these things, right? Like, well, that doesn't work because it just doesn't define price all that well. If this was a super sharp downtrend, it would, but it's not, right? So what you have to do is you have to shift it. You have to shift it over a little bit, and you can kind of play with it until it starts to work. Well, sure enough, come in this morning, and you see this happen. 4 o'clock. This happens up here during London. Spikes up into it again. This was the PBOC. Spiked up into it right here at 6 a.m. in New York. Started coming off again. I was like, okay, this is actually defining price fairly well. I think we have the right slope here, right? So once you have something like that, then you have an idea, right? Then you can work on it. So I know that yesterday the market went and hit a huge upper parallel line, that is really, I was unexpected, to be honest, that we got that high. But in any case, it was a sign of exhaustion, the fact that we traded right into it. Okay, and then what you can do too, when you make these parallels, and you can put the parallel and extend it if you have like any thrusts that go above your structure. Put it right here, and then that's exactly how I got the 117.90 level. Right, it traded right into it. The high was 95, but doing this, it enables you to hone in on an entry, and it's obviously super short term here. I'm looking at a 5-minute chart, so this is a trade that's not going to last more than likely longer than a couple hours. But it's just an example, okay, of how to, position after, get a point of reference to trade from. And after all, that's really what it's all about. It's getting a point of reference. Another thing that you can do very quickly is put on a moving average. And for hourly charts, a 24 period and a 120 period moving average can work wonders. Why? Because it's just the average price for the last day on a rolling basis and the average price for the last week on a rolling basis. There's 120 hours in a week, right? So when you look at, this seemingly parabolic rise in the dollar yen, I mean, each time we've come down into the 5-day or 120 moving average, it's actually been held pretty well. I tried shorts earlier in the week on dollar yen up at 116.46, where we opened the gap up, came off hard. It's like, okay, I'm going to resell the week open, which is this line right here. Came up, just didn't work. Okay. But then you get another point of reference by using the 24 average. So after we had the initial sell-off, you can see that we came off, we traded into the 24 moving average, sold off again. 24-hour moving average continues to hold pretty well, right? So when you combine that with everything else that I just talked about, with the pitchfork and all that stuff, you've got all that stuff in one place, right? It's all at like 117.90. Kind of gives you a little conviction on the trade. That's the trade setup right there for a short term. Now maybe this turns into something else, right? It's very difficult to say. If the market trades back to 118, I'll be out of this trade and move on to next week. But I think there's going to be a huge opportunity on the yen cross is obviously on the downside. We've already seen it with with euro yen today. And dollar yen, the feeling's probably going to be not far behind. So let's see what else. Jonas says, Jonas, what's up, brother? Can you explain why the pitchfork works so well in short term? I mean, look, it works on any type of time, on any time frame, and it's not just the fact that it's the pitchfork or whatever. It's the slope, right? Now you never know if you have the right slope. Okay, all you can do is go on what's been what the market's been doing. If you have enough touch points where, if that slope defines the trend well, then you have the confidence that, yeah, I'm working with the right slope here. So, that it's, I'm working with the right slope with the right levels. So when the market gets there, I'm expecting it to respond, right? And when you're talking about an intraday chart, like a 15-minute chart, whatever, maybe you have, there's actually opportunities to take trades with 10 or 15 point stops on an intraday basis. The best, I talked about this last week too, but the best example of the dollar bull trend has been dollar Swiss. Now, somewhat annoyingly, it did come into the reaction zone of 95.05, 95.50. I was looking for it to actually tag this line. It didn't do that, right? It was kind of more looking for it to come into one of these things here. Maybe today, look for that Friday low, maybe, early next week, whatever. But what happened? Draghi had to come in and mess it all up. Isn't that right, song? That's right. So, in any case, even today's high, it's actually interesting to note that today's high is right at the top of the upper parallel. So this has been a pretty good map as far as support and resistance is concerned. Now look, eventually I do expect the support to come in down here at some point, right? I don't even need that anymore. I do expect it to come down here at some point, just haven't had that correction or whatever yet with dollar Swiss. Now look, sometimes you have it totally wrong, right? I mean, here's the euro dollar. This was the one that I was working with more recently, this week. You guys, or some of you guys know, this is the one we were working with, right? Thought we had the right slope, and it turns out that we didn't, because we didn't have any support at these things, right? I was kind of shocked to wake up and I guess see that we were trading at 124.50 by the time that I woke from my slumber. But this was the wrong slope here. So what you have to do is you have to go back to the drawing board. All right. That's all it is. I mean, so I'll delete these, and that's my weekend. Most of my weekend work is done trying to figure out what the slope is on these short-term trends. Because the bigger term trends, you have a pretty good idea. I mean, we're talking super long-term here, but this has been in play forever, right? It's a monthly chart for the euro. What else? Guest asking about Kiwi. Sure, Kiwi actually is a pretty clean short-term path, I think. PBOC jacks up to 79.50 or so, a couple pips shy of the open for the week, which was 79.49. Our high this morning was 79.46. Remember, this was the old guy that we were working with here. This one here. So, do you want to totally get rid of this? Not necessarily, because this actually can act as support now. I'm still of the mind that you probably have an A, B, and a C wave unfolding, and that the huge support is still probably down at 77.40 to 77.70. But after that, I think you have potential for another rally. just based on a 5-wave move up here off the lows. And, you know, it's kind of draw something like this. Obviously this is really early because you don't really have any touch points here, so you don't know if you have any slope to work with at all, you know. But let's say that the market, you know, were to start, let's say you had this, the market were to start bouncing along here, right? It'd give you an idea that maybe you have the right, you know, the right slope. But yeah, to answer your question, guest, talking about 77.70, I'm not saying the 77.70 is out of play yet. May very well be in play. You know, based on the fact that we have what looks to be like a 5-wave 1, 2, 3, 4, 5 down, and then a 3-wave up. That final drop down here. It'll be interesting to see how we open on Sunday. We've had some gaps the last few weeks, openings. So, you know, if the market were to gap higher, you know, on Sunday, you'd probably look for resistance up at 79.10 again. If you're wondering what 79.10 is, it is quite simply the close right here from Monday. Gap open, close down, that level now, potential resistance. You can see it clearer on the daily though. Working with this may very well have the right looking slope here for Kiwi. Okay, why? Because we've crossed through this median line multiple times. Okay, and each time we've done it, we've had a pretty decent sized move over the next day or two. So 77.40, 77.70, you know, intersects the bottom of that range, intersects basically, what is that, like next Wednesday, right before Thanksgiving. And we have had some big moves around Thanksgiving. You know, I think back to 2006 Thanksgiving, the euro and the pound went nuts on the upside for like 700 points in 2 days. Back then. 2011, Aussie and Kiwi bottomed on Thanksgiving. On Kiwi bottomed, gapped higher after Thanksgiving, and has a gap that still has not been closed. You can see that here. You can't see it on that chart. You can see it on this chart. That was right here, right there. So that was Thanksgiving 2011, 73.90. Opened up the next week all the way at 75.05, over 106 points, or 116 points on the upside, and it really didn't trade down that much. Obviously never filled it, and we were up that week. You know, from the gap, the close, the uncovered close, 73.90. We finished almost 500 points higher from that week. So it should, you know, it'll be an interesting next week or so with Kiwi and Aussie, but especially with Kiwi because of the short-term pattern that you have going on here. With, you know, again, 5 up, 5 down, 3 up, another 5 down, gets you potentially a very viable low, but we'll have to see at the time. Thoughts on Aussie Kiwi? Sure. Okay, so Aussie Kiwi, glad you asked because I haven't looked at this in a while. We are right at, again, parallel support. And I think this is the right slope to work with because the upper parallel was resistance, okay? And it's when you have a gap through a median line. In fact, median line analysis, one of the things that people often do is to identify gap risk. When you're trading near it, there's oftentimes gap risk. The market will gap through that median line for whatever reason. You've seen it a million times. Obviously, you see it in the stock market much more than you see it in FX because it can only really happen on the weekend. But I think we're probably very close, if not at a low here in Aussie Kiwi. And that you could look at this chart without, looking at really anything else and just say, well, yeah, it looks, we're in a range. Been trading between 113 and 109 since September. And here we are at the bottom of the range. So it's in a range, play the range. But you also have the support here too. So just see how that opens up next week. Okay, I've got questions on crude oil, U.S. oil. So I'm going to bring up a chart of that. Guest here asking if indeed this is a fifth wave in the euro. How large a retrace do you expect? All right, well, that all depends, like anything, on when it would get there, right? You can't look at it in a vacuum. So, for that, that's why we have these longer term weekly charts we look at. This line right here, again, this is the long-term slope of euro. Okay, so we do have an intersection in February of 2015 at about 129. That could be interesting. It's impossible to say. I mean, all you can do is go on your reaction levels. And, I'm saying next week, the 2450 is a big level on the upside as far as resistance is concerned. And 2230 to 2315 is a big level for support. As far as looking out any further than that, almost impossible, in my opinion. I mean, you can probably say really long term that the euro dollar is probably going to break down, just because it's been in this contracting triangle since 2008, and it's threatening basically the fourth big breakdown. And as far as I know, there are no quadruple bottoms, so it's unlikely that this holds. But the break could be in the middle of next year or in 2 years, for all I know. I don't know. In the meantime, you got to pay attention to the slope and the former inflection points and all that. And this does look like a nice confluence for sure, up near 130 or 129. So when we look at crude oil, I gotta pull up the UK demo here to get the crude oil. Here's dollar CAD, by the way. If you watched last night's video, we were looking at dollar CAD, and this thing spiked right into this line, right? So that's an interesting study in short-term reaction line analysis. Put up this crude. So this was a chart put up yesterday for crude in the daily technicals. And talk about slope. This line is now probable support, I think, and it's near 72. Okay. And if you look at how the market traded today, we traded up into the 20-day average to the tick, and now, obviously, excuse me, coming off a little bit. So I'd keep an eye here on 72 as a support level. Ultimately, there will be fuel here for a short covering rally, if you will. And if that happens, then you want to watch. You want to trade with the big slope if you're a bigger swing trader, and your resistance is going to be up here at about 84.
It was like 2 hours today.
Right. Right here. So that's what I'd be looking for. So 72 support, 84 resistance. That's how it lines up right now, at least. And why 84? Well, one, it's a former, kind of in Elliott, it's a former fourth wave extreme up here, 84.40. And if you look back too, it's a big low. It's a big low from November of 2012, right? Rudy saying, do you give credit to this line in euro? He just put it up. Hey man, yeah, maybe it's, you want to see if you have another slope, if you extend that line, off of former highs and you start to get, let's see here. Let me try that out right now, Rudy. So we'll get rid of all this. So you're looking at, I believe you're looking at, you're looking at this. Looking at this one? Yeah, that's the one you're looking at. Okay, so what you want to do is see if you have any other instances of that being, the right slope. So does it cross anything else? To my knowledge, doesn't really. Hey, it could be. Look, I still think that 120, 315 is the bigger support to potentially test for euro, and so I'll stick with 120, 315 as support and 124.50 as resistance, but wanting to participate in the near-term trend and looking at the 24.50 figure. Okay, next week. In particular, the underside of this line, right here. All right. Good looks, though. Good looks. So, taking a peek here, and Rudy, I like your Kiwi chart. It's a good-looking chart. I just saw that. Okay, all right, so I'm going to shut it down here. I'm just going to show you a few final possibilities for early next week. We went over some of the big majors here. Some of the exotics, you have like dollar, South African rand is interesting. Okay, again, here's that daily reversal support right there. We actually, went through it today. We're going to close above it, or so it seems. And then, of course, you have this pitchfork median line here also coming into play at the low. So that's an interesting thing to take a peek at. Trendline, bigger, more traditional trendline support is a little lower. It's actually kind of close to the low, near 1082.
In any event, I'm not
but
bullish. I'm saying right key resistance.
Broadly speaking, this is a bullish trend. Okay, we had a big breakout in September with the breakout above the June high, and then we actually came back and tested that level here at the very end of October. I was looking at getting short EM currencies then, Turkish lira as well as South African rand, and it was like a day early. But in any case, here we are getting back into these levels now with the dollar rand exchange rate. So again, breakout, retest, and then now in the range, coming back into the bottom of that range. So it's an interesting idea moving forward. Tiago asked if I think the dollar can go higher next week. It sure can. Yep, it sure can. You know, again, that's not really how you want to go about things. I mean, you know, if you develop, the first thing is develop some sort of method for how you are going to identify the reference points to trade, to enter and exit markets, right? You know, I've got my levels on my chart that if it gets there in a certain manner, a certain time of the day, and you know, it's more than likely gonna, you know, get a response or whatever. And you know, for that euro right now, 24.50 is a big one. I'd like to see it come up there and maybe test before you come off again. You know, just a thought. But yeah, the dollar can certainly go higher. We're getting into really big levels. Okay, we have been for 3 weeks. We've been going sideways for 3 weeks. We bursted new highs here today. It's almost the opposite of last Friday, where we went to new highs and then reversed lower. Today we, you know, just bursted to new highs, and dollar index is sitting at new highs. But you know, key resistance up here just above. Okay. Oh, finally, yeah. So it said I'd show a possible Aussie deal, longer term Aussie deal. Let's see. So with the Aussie, you know, the last 3 weeks sitting on this big long-term support line, right? From the slope, goes all the way back to 2001. Here is Aussie dollar since the October low. Everything's been a correction. Higher, lower. Now we've, you know, kind of traded in a pretty crazy range in November. But the idea here is, you know, again, possibly the middle stages now of a running triangle, which means, you know, A, B wave low, working higher in a C wave, potentially, back lower again. In other words, a contracting range triangle. Okay, this is just a possible path. All right. You know, and you say, well, like, why would you suspect something like this? Well, one reason, again, if we look at 240-minute RSI, you notice that we've been basically since the lows, we've been stuck bouncing in neutral territory on this indicator since the lows. So put up the daily. Oops. The daily as well. Since the lows, we've been bouncing between basically 50 and 35, right? It's a corrective profile for momentum. Okay, so what that means is, you know, the swing is still on the short side. So, you know, hold on, I was just reading a comment. But the swing is still on the short side, but respect, you know, potential for additional sideways trading, simply because the count is there, the momentum is there. If we look at Aussie dollar, you say, why can't this be wave 5 going to the low here? Well, look, there's a lot of things, you know, that there's always multiple possibilities, but from an analysis standpoint, when you count this, you can count 7 waves down, and typically that means that's not the low, it just means it's part of a larger correction. Okay? And then this rally is obviously extremely choppy and sideways, so it's unlikely the start of a bigger bull move. It could be the start of a move to, you know, to range highs, but unlikely to be the start of a, you know, gigantic low, you know, rally off the lows. But that's kind of my path, what I'm thinking is happening with Aussie. This is not something to necessarily just trade off of, right? The trade setups come on the shorter term when you define the risk, okay? But if you have an idea that the market's in a range, then as the market approaches range lows, you're looking for signs of exhaustion, signs the market is, turning around. So that means what? Look for hourly reversals. Look for, the market to respond to some of these longer-term fib levels, for example. And on that note, I'll leave you with a chart from I think it was Tuesday or Wednesday. Hold on one second. It's a chart from find it. Here we go. So this was a chart from the other day, from the 19th, and we had talked about, this was Aussie, talked about 88.6 retracement, okay, of this rally, and the 61.8 extension of the prior leg down at 85.66, right? It's kind of obscure, Fibbo level 88.6. It's the last one, that I would use, but it is there. And sure enough, here was the low at 85.66. So once that happened, you're responding to these Fibonacci ratios so well, it's giving you a little more confidence that, you know what, maybe this triangle interpretation is the right count to work with. Okay? So with that, I'll leave you guys for the weekend, and got a lot of work to do as we head into next week with, the euro probing these lows, figure out what we want to do there, but be able to sit back and take a deeper look when the markets aren't moving. Okay, so that's great. Thank you all for joining and watching the webinar. It's been a pleasure. Have a great weekend, and be back next week. And guests, thank you so much for the comment. That's great to hear. Take care. All right, bye.
Hey, Jamie.
What's up?
US dollar can go up next week.
Good, man.